Well, hello, everyone. It is December 3rd in 2024. I cannot believe it is already in December, and we are seeing probably something we haven't seen in a bunch of months, and that is inventory absolutely plummeting, but it's okay, sort of. And I'm going to tell you why here. Let's get started. My name is Stephen Meade with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. This is our Southern California housing market update for December 3rd, 2024. Let's go ahead and jump into the stats. And right before we do that, a lot of people think that because we live in a market that doesn't have pronounced weather changes, that the Southern California real estate market does not have seasonality. That is incorrect. I think a lot of that seasonality has been masked over the last few years. I think that just such a hot market, it's just been such a brisk market the whole year that we haven't really noticed the seasonality quite as much. But the reality is, we do have a seasonal market. It's just different than the snowbelt seasonal market. In our market, as we head towards the end of the year, we tend to see that inventory drop off. We tend to see the market slow a little bit. Now, admittedly, our period of time for this is much smaller than other markets. There is a joke in these snow markets that from the first snowfall to the first warm spring day, it's pretty much a dead market. Here in Southern California, it is a much smaller period of time that we see that market seasonality. And it's usually a bit of a smaller window for buyers to take advantage of. But let's go ahead and jump into the stats, and I can tell you what I am talking about. So here is the big one, right? We're talking our blue line is under $1 million. Our red line is $1 to $2 million. And you'll notice that those numbers have really just kind of taken a bit of a nosedive. Now, if you look at this point last year, you can notice there on the left side of the graph that this is not unusual. Again, this is a seasonal pattern for Southern California. Inventory will crest sometime in the fall, and then it starts falling off because what happens is you have buyers who really continue buying to the end of the year. I think a lot of that's driven by first-time home buyers, right? First-time home buyers tend to not have the time constraints that seasoned home buyers have. So, for example, they will move any time if the right house is available. They're typically coming from an apartment. They're less likely to have children in school, et cetera, et cetera. Yet home sellers, on the other hand, tend to be in the other category, right? Like timing is important. They do not want to move around the holidays. So what you see is this asymmetry, right? The market for sellers slows down significantly, but the market for buyers, while it does slow down, it doesn't slow down as much. And that results in some of that built up inventory tending to get eaten up. Now, if we look at our new listings in the last 14 days, now, admittedly, part of this is exacerbated by the Thanksgiving holiday. I don't know of any seller who wants to put their home on the market the week of Thanksgiving. But if we look at that here, you can see that it is especially acute. I mean, really, that number is dropping below, at least for that under 1 million category, or we're right about where we were at this point last year. Definitely a very precipitous decline. You'll notice that things are actually pretty steady here in Southern California. You'll notice we ramp up a little bit through the spring, but by the time we get to March, we're pretty much trading in that same window all the way through October. And that really, really kind of hits you both with the under 1 million and the 1 to 2 million. Our actual season for homes going on the market is a lot steadier than other markets. Now, if you look at our new escrows, you can see exactly the reason why that active inventory is falling. We have lower demand here, but not nearly the level of decline of the lowered number of new listings. And so when you think about it, right, it makes sense. If you're not getting as many listings, but your buyers aren't dropping off nearly as fast, you're going to be eating up some of that inventory. But I will tell you this, guess which sellers are on the market right now? The ones who need to sell. And that could still be an opportunity for buyers. And if you have a house, if you're a seller and you've got a home that's really great, you're actually going to see a little bit more competition, especially for those upper tier top 5% homes. And look, if we see that, it's reflected here in our absorption rate, and that is hitting over 90% really for both of our price categories. And actually for 1 to 2 million, we're over 100%, meaning For every home that came on the market, more than one of them went into escrow in the past 2 weeks. If we look at our closed prices, right? I mean, things are really kind of in a steady zone. If you extrapolate these curves a little bit, you can kind of see some of that seasonality in the market, right? Things tend to accelerate through the spring. They get a little bit soft as we head towards the end of the year. And one of the things that really isn't told by this chart, and I wish it was because I think this is a very important lesson, is that different homes are affected by market seasonality differently. And what do I mean when I say that, right? It means that even within a given category of house, we'll call it single family homes around $1 million, right? I think that's a pretty common category of home that people might be interested in, pretty close to our median there. If we look at that, I will tell you that during this period of time, the homes that are turnkey, the ones that look great in pictures, those homes are a lot less soft during this period in the late fall, heading in towards the holidays, than the homes that maybe need some work, maybe the homes that have been on the market a while. So just understand that this seasonality doesn't affect all segments of the market equally. And if you are an astute buyer or seller, you can really sort of take advantage of that nuance, which in our market is even more than a nuance. I'd say right now, your experience as a buyer looking at turnkey homes is very different than a buyer looking at homes that need some work. And likewise, if you're a seller, you will have a very different experience, even within the same neighborhood, similar areas, similar price ranges, etc. And if you look at our percent active after 14 days in the market, this is a little bit more of a longer term view of absorption. Even that is at a relatively high competitive point in terms of the number of homes that are coming off the market and how fast they're moving. If you look at our close to list ratio, this one is kind of interesting to me. Our 1 to 2 million category actually leapt over 100%, and we actually dropped under 100% for under 1 million. I think that is really sort of a marker of where we are with interest rates. I think for those incoming first-time home buyers, we're definitely bouncing on a little bit of a ceiling. Whereas I think those buyers who maybe have a little bit more money, maybe the stock market's been particularly good to them the last couple of months, they are feeling a little bit more emboldened to get the home that they want. If we look at our days on market for new contracts, that is going up. And while that might sound like a scary number to you, I think there's a very logical explanation. If we are seeing more homes leaving the market than are coming on the market, right, that are going into escrow, presumably that means it is some of those older homes, the ones that have been sitting on the market longer, that are finally finding their buyers and going into escrow, and that is affecting that days on market for new contracts. Remember, this isn't days on market of the whole market. This is days on market of the homes that have found buyers in the last 2 weeks. Now, if we look at our three-way chart here, right, which is where we attempt to plot the price of housing since 2018, I think this is always kind of a fun graph. If we center back to June of 2018, where are we 6.5 years later? Well, the payment index is basically about 80% higher than it was in June of 2018. So for all the people I told you should be buying a house during this time period, you should have listened to me. If we look at our rent index, rent is over 100 or over 40% higher than it was in 2018. If we look at our overall CPI index, we're around 125% higher, or 25% higher than we were in 2018. Again, we're watching for that critical space between that rent index and that payment index. And the reason why is that payment index really has to remain within about 2 bars or things start to get a little bit wonky. And I think that's why you're seeing really prices are kind of holding steady, right? I think we're going to see that rent index might actually take a jump as we head into the spring, and probably prices will go with it. That is my expectation over the next 3 months. But as usual, we've got a new administration coming in, potentially some political changes, which may have varying effects on the economy. So keep a lookout and keep your eyes open. And then finally, if we look at our prevailing mortgage rates, we're having just kind of coming back up and almost kissing that 7% mark. We are just shy. I think everybody's kind of hoping for a little bit of relief. I think that relief is going to come next year, but it is going to come much more slowly than maybe we would have predicted. I think that's for a few reasons: economic strength, trade tariffs. All these things are somewhat inflationary pressures, shall we say, and I think they're going to reduce how quickly those mortgage rates come down. Anyhow, that's all we have for you. Don't forget to like, subscribe, and hit that notification bell. As always, if you are looking to buy or sell real estate here in Southern California and you'd love to have our expertise, we would love to lend that to you and help you accomplish your property goals. My name is Stephen Meade again with Domicile Real Estate. Definitely reach out to us, contact information below, and we will see you again real soon. Have a great day, everybody.